Okay, we're recording. Today's date is Thursday, October 28th, 29th, 10, 29, 2020. We are on our brand new unit. Our unit is called investing. As you probably saw by our word wall yesterday, there are a lot of things that deal with investment, most of them dealing with the stock market. Although there's quite a bit of investing, like investing in shoes, investing in gold and platinum, investing in property that aren't related to the stock market. I mean, everything is related to the stock market nowadays. It's tied into our economy. I will say this at the very beginning of the stock market lesson. The stock market and the United States economy, or the economy of any nation, are not the same thing. While yes, they are super, super related, if you mistakenly say, oh, the stock market is doing bad, so our economy is doing bad, you're probably correct, but they are not the same thing. They are distinct entities. All right. Our objective for the day is to learn the history and the basics of the stock market. Who wants to read our quote? Beautiful voice. Adder Hood. Beautiful voice. Come on, someone. No? Monse, you have a beautiful voice. Read this for us, please.
Investing should be more like watching paint dry and watching grass grow. If you want excitement, take $800 and go to Las Vegas.
Yeah, and again, Paul Samuelson is this guy on Wikipedia that we were looking at. He is super, super famous when it comes to econ. What's the quote that we have? The foremost academic economist of the 20th century has done more for any other contemporary economist to raise the level of scientific analysis and economic theory. Won Nobel Memorial Prize. Super cool dude. All right, so let's go ahead and ask the question, what is a stock market? I think that's everyone's first question, right? So come over here. What is the stock market? It's interesting that sometimes it detects that there's a line there, sometimes it does not. All right. There's 2 bullet points that I want to have. I do a little star because I can't make a little dot unless I draw, I guess. I could draw. It's a place. First of all, it's a place. It's a location, either online or physically a building, right? It's a place where, can't spell, where investors connect to buy and sell investments. That's as simple as I can boil it down for us. Also, when you say, how is the stock market doing? Sometimes as a noun, if you refer to it as a thing, then it means something else. So I'll put that on here as well. So it usually refers to a major stock market index, like the Dow Jones Industrial Average, or the NASDAQ, or no, S&P 500. I don't know, S&P 500. There's a difference between what is an exchange and what is an index. S&P 500 and Dow Jones Industrial Averages, those are indices. The plural of index is indices. They just basically say, hey, here are 100 of the companies that are pretty stable. On average, those 100 companies or those 500 companies are doing like this, and it graphs the average of those companies. So it's just an index to let you know how the stock market is doing. And usually when you say the stock market, you're referring to some sort of index. If you went to some sort of financial channel on TV or online that's a live stream, in the bottom right or left-hand corner, they should have what is the Dow Jones doing, what is the S&P 500 doing, and it says, oh, it's up 31 points for the day or something like that. It'll tell you how it's doing. Is it doing good or bad? That is the index of how the stock market is doing. And which stock market? There are a lot of them, but we'll get to that in a second. So what is a stock market? That is a stock market. Where did it come from? I think is the next question. What is the history? Where did it come from? AKA, what is its history? So it has a really interesting history. And if you guys have ever watched Pirates of the Caribbean, which I assume is most of us, you will have seen its origins in the late stages. Haven't seen it? Some of it? Okay, so let's talk about the 1600s. That's where it originates. So 1600s. what's happening in the 1600s? So I believe we have colonies in the United States. We have lots of trade networks from England to the Americas to Africa, all of that Europe area. Trade networks, Pirates of the Caribbean era. You guys can kind of visualize what's happening right now, right? So in the 1600s, the original company that started trading stocks and stuff by accident, really. I don't know if I want to use the word accident, but the Dutch East India Company is the first company that started this. And then, of course, all the other East India companies added on as well. By the way, there are a bunch of different East India companies. East India just meaning you go to the east, you go to India. It's like the location of your trade network with your ships. So these ships, there was the Danish East India Company. There's the British East India Company. By the way, Pirates of the Caribbean, that was the British East India Company. I'm pretty sure there's a Portuguese East India Company. There's the French East India Company. There's the Swedish East India Company. There's a lot of these. But this is the one that started off first. So in the 1600s, the Dutch East India Company, they had hundreds of ships. Hundreds of ships. And if you have picked up a book and read about how that works, one ship, if your family owned one ship, that's how you made your income. One ship cost a lot of money to manage, to say, okay, this ship is going to take on this many sailors. They're going to travel for a year or two. They're going to travel all the way to India and all these countries. They're going to buy ivory and silk. They're going to buy different types of gold. They're going to buy tea. They're going to buy all these things. They're going to come back here and sell it for like a huge price, and I'm going to be super rich. But the initial investment for those ships was it was too much. Like if you have 100 of those ships, it's like a huge number. So hundreds of ships. What do they trade? They traded gold, porcelain, spices, silk, ivory, tea, and much, much more. You might sell animals if you can get them to survive. You might, anything that you think you can sell for a good price and you got it from a different country that you can't get if you're thinking of the average person in Europe, that will fetch you a good price. Those are the things that you want to be trading. And you can think like of the modern equivalent of thinking, oh, what's really hard to get, I don't know, in the Eastern Sierra singular, right? What would you want to trade over here? All it is it's merchants, not owned by the government, just these private individuals that are saying, hey, how can I make money? What's the best thing to sell? That's what their goal is. But the problem, it's expensive. It's super expensive. It's, maybe I'll do it in all caps. It's caps lock. There it is. Where's caps lock? Super expensive. To finance, like even one ship is hard to finance. You got to be kind of a wealthy family to have your own ship, to sell your own stuff, to be a merchant, right? So what was a solution? Like obviously once they came back, yeah, you turned over your profit, but the initial cost of getting those ships out the door, to pay the sailors, to buy the boat, to pay for the everything, it was expensive. So the solution, they said, hey, let's go find some rich people and they'll help us, right? The solution was they turned to, they're called officially private citizens, which is different than the government. They didn't go to the government and say, hey, we need help, help us. They said, okay, I'm just going to talk to my friend. Yo, Jenny, you got like a few mil, right, in the bank. You want to invest like $500,000 in the ship? And Jenny's like, okay, sure. Why? And then I say, you're making a ton of money when we sell all of that porcelain, all the spices, silk, ivory, whatever. Like if you invest $500,000, I'll give you 50% of whatever I make, and you'll make maybe 1.5 million or something like that. Pretty good investment. You'll triple your money or something crazy like that. You'll make really good money. So they turn to private citizens for a share of the ship's profits. Ooh, there's the word share. That was brought up yesterday in our word wall. You got to share the profits. And this worked. So what this is, it increased the profits not only for the company, but also for the investors. If those investors were trying to buy, probably weren't investing in shoes or anything weird like that, but they were probably investing in land and businesses. This was a way for them to invest in, it was a business with a pretty good return. So really, really good profits. And also the thing that happened, you could go on grander voyages. So you could go on, I'll just say grander voyages. You could take more risks. You're like, I could go to all the way over here to this weird part of Asia. Maybe before this, you weren't really traveling to India that much. I could regularly travel to India every single time. You could do all these crazy things that you couldn't do before because you had the capital, you had the money to do it. And there is a modern equivalence to all of this. Like if you're, I don't want to get ahead of myself. I'll talk about it by the end of today. So it worked. But how do they get people to sign up for these shares? As my last bullet point for my history, they sold these shares of your profit, sold shares in coffee houses and shipping ports, which was, it worked. But eventually there needs to be a more efficient system. Maybe if I could publish it on the website, on a website, and have people say, yeah, I'll take a share, I'll invest my money into you, and I get some of the profits in return, right? So there needs to be a more efficient method. And this is the very early 1600s. If you're thinking, like later, like what we do in the stock market nowadays, like if you pay dividends or anything fancy like that, the Dutch East India Company did it first. Like this all has its roots in a physical thing that happened, and now it's like virtual on the online, and it doesn't make as much sense. But this is the original idea. All right, so let's move on to what are the exchanges. So we know its history. It started by just a trading company. By the way, do you guys want to draw the logo? You guys probably saw this in Pirates of the Caribbean. I kind of want to draw it. It looks like a capital letter V with like these signs like that. There's the O and then the C, and they stamp this onto all their coins. They stamped this onto it, like they had a flag embroidered with it. That was I think it was the Dutch East India Company's logo. I might be confusing that with the British East India Companies, but yeah, it looked like that. By the way, those letters VOC stands for, I'm going to butcher this pronunciation, but Verenigd Oosh. Okay, it's Dutch. I don't know. Maybe the girls who are more worldly would be able to pronounce it better. Oostingicht Compagnie. It's, yeah, there it is. Try to sound it out, Anna.
Verenigde Oostingische Compagnie.
Okay, well, yeah, way better than I did. Thank you. So there it is. Let's talk about what are the exchanges nowadays. So one of the exchanges was the Dutch East India Company. If you have and I guess it wasn't really an exchange. An exchange is a place where one business or many businesses can come and say, buy our stocks, buy our shares, invest in us. We're really awesome. Please give us money so we can buy nice things. Next questions. What are the exchanges? Let's just focus on the United States, in the US. And there's a lot of them, but there's two really big ones. So I'll do 1, 2, and then I'll do bullet points from there. So the first and biggest, most common, actually, I don't know if it's biggest anymore. Let's talk about the New York Stock Exchange. It was established in 1790, so I'll put 1790. So it's been around for a long time. But it doesn't exist anymore in its current form. Even in like 2000s, it was still there, but then in 2007, something kind of interesting happened. So bullet point under here. In 2007, it actually merged with the European market. In 2007, it merged with, it's called Euronet, which was the European Stock Exchange. And it is currently called, now called the NYSE Euronet. They just put both of them together.
Europe and New York have the same stock market?
Well, remember that there are multiple exchanges within each country, but the mega one for both Europe and the United States are now merged. They are now connected, yeah. Which is kind of interesting if you think about the implications, right? If you think about, okay, United States has a horrible pandemic that is going to destroy our economy, and it's not synonymous with our stock market, but it does mean our stock market is doing worse. It's also meaning they're doing worse too. So right now, as of 2020, over 80% is done, I can't spell, is done electronically. Done online, which is pretty good. I mean, back in the day, I still remember talking to my high school calculus teacher. He was way big into trading stocks when like he was really young. And the way that he traded stocks was pulled out the newspaper, and the newspaper would have how each stock was doing, and you can compare it to the previous newspaper, say, oh yeah, it went up, and it usually says, yeah, it went up. And then if you're like, oh, I want to buy a share, you pick up your phone, you dial and be like, okay, I want to buy this share, and it takes you a long time. That's not how it works anymore. Nowadays, you go onto some sort of platform online, you click a few buttons, and you're done. They charge you $10 to buy or sell the shares, but it's a lot more efficient because it's done electronically instead of on the phone. So that's the first big one. The second big one, I hope that you've heard of it. If not, that's okay. It's called the, I'm not going to make you write down everything. It's called the NASDAQ, which is an abbreviation of, and I get to type really fast, it's called the National Association of Securities Dealers Automated Quotation System. Whew, that's a mouthful. Much easier to call it the NASDAQ. I think we can all nod our heads. So those are the two biggest ones. The cool thing about the NASDAQ is it started off online. So it's 100% on electronic. It was cool too when it first started out, and even currently right now, it has lower listing fees, which means if you're a company who wants to have a coffee shop, I haven't picked on Loretta yet, right? And I'm not really picking on you, but Loretta's gonna be my example. Loretta, you want to make a coffee shop. If you want to make it a public company so that people can invest in you, then you probably want to go to the NASDAQ because it's cheaper to say, invest in my company, come here. You would want to go to the NASDAQ, which means most newer companies like Google, Apple, Microsoft, Amazon, Tesla, Facebook, all of those are public companies. They are all on the NASDAQ because they're relatively newer. All of your older companies like MasterCard, Visa, General Motors, Walt Disney, any sort of bank like Wells Fargo or stuff like that, those are all kind of older companies. Those are on the NYSE, New York Stock Exchange, Euronet. Why did I type in Euronext? Sorry, Euronet. I think it autocorrected there. Sorry about that. So older companies, New York Stock Exchange / Euronet, newer companies, NASDAQ. We can make that distinction. If you want to add to this, you can and say what those companies are, but you can also look them up online. And there's a ton of other, so as my third bullet point, a ton, what do I mean not a ton? I'll just say a lot of smaller exchanges. Again, I'm still talking about the United States. So there are exchanges, there's like the Boston Exchange. I don't know if there's a California one, but there's just a bunch of just different smaller ones. I would say probably at least 7 or 8 of them. So you don't have to go through those two main ones, but typically you will. All right, I want to talk about how the stock prices fluctuate, what that means, and what it means for Lorea's business. So you can change it to your name if you want, but I'm gonna say Lorea's Coffee Shop, example. So we can really wrap our heads around what's going on here. All right, so we're gonna assume that Lorea, maybe you have a coffee shop already. Let's go ahead and say you have your own tiny coffee shop, but you want to expand, you want to make it a public company. So we'll say Lorea has a small coffee shop, maybe for a few years. And again, you don't have to write down every single thing I'm saying here. You can now start abbreviating. If you don't want to write down a line, that's fine. I just want you guys to get the main idea. And she wants to do new things. Maybe she wants to have another coffee shop in Mammoth. Maybe your coffee shop right now is in Levine, let's assume that, in Mammoth, and maybe another in Bishop. But you don't have the money to do that. But you have a good track record. You can say, hey, everyone in the community knows that I'm a pretty cool coffee shop owner. But I need people to invest in me. I need money so that I can expand to Mammoth. I can expand to Bishop. She also wants to do some other new things. She wants to try making, I don't know, I'm going to do unicorn frappuccinos. I do not know how to spell frappuccino to save my life. Frappuccino. Yeah, please Google save me. Yeah, thank you. You know what I was talking about. Google Smart. Unicorn frappuccinos or other new products. But again, those are risky to do because if they don't work, then you lose all that money. So what Lorea wants to do is she wants to be able to take on more risk, travel to India or in maybe somewhere else around the world, right? She wants to take on more risks and expand, but she doesn't have the money for it. She needs a private citizen or anyone that can invest in the stock market to come in and give her some money. So what does she do? First, she makes her company public. There are private companies that you cannot invest in, which is fine. It can work. And that just means it would be Lorea maybe rubbing shoulders with Jose and maybe her sister Anna and Kira and maybe everyone in this class like, hey, invest in me. And it's private. It's not publicly listed. No one else can invest in it aside from people that you want investing in it, Lorea. But if you want lots of money, you need to, well, you don't need to unless you're really, really well connected. The easiest way is to make your company public and sell parts of your company, which is scary, right? Because if you sell all of your company, you are no longer in charge of your company. But you can sell, let's say, I want to sell 40% of my company. I still own 60%, me being Lorea. You still have 60% of your company. You get to make all the decisions, and you can let maybe 1,000 other people control the rest of the 40% of your company. So maybe she will sell up to, I don't know, 40% of her company publicly. And when I can't spell publicly, when I say 40%, that's you selling shares. You can say, I'm going to make this a really simple example. This is not at all what would happen. You probably have like hundreds of thousands of shares. Let's say she divides up her company into 100 shares. That means there are 100 pieces of your company. And if you have some sort of net worth, let's go ahead and say her company net worth right now, I don't know, how much is a coffee shop nowadays? If you have to buy one, I have no clue. Should we try to Google it? How much does a coffee shop cost? Let's go around the lower end because we have a smaller town. Let's say your coffee shop is worth 200,000, which is a lot of money, right? So we need more shares because this is going to be way too much money per share. Let's make it 10,000 shares. 10 with, so it's a 1 with 4 zeros after it. That means if I do the math, if I do 200,000, and then I'm gonna have to write here because I need this to look like a fraction. 200,000 divided by 10,000 shares reduces to, and then you can probably do the math in your head because the way that you divide with zeros, you just cross them off. Cross off 0, cross off 0, cross off 0, cross off 0, and you get 20 divided by 1, which means each of her share costs $20 per one share. Which means if you want to buy a share of her profits, you will pay her $20 and you now own 1/10,000th of her company. So, and you have to be careful now that you're a public company, Lorea. If you only want to sell 40% of your company, you need to only sell 40% of your 10,000 shares. That means you are selling 4,000 of your shares. to sell 40% of her company, she will only allow 4,000 shares to be sold. And as a note, she will keep 6,000 shares to herself. Okay, so your company is now public, Larry. Good job. You did all the paperwork. It was hard. It's probably up on the NASDAQ. It's public, and people are going to start buying it because, I mean, I would invest in you. I want to buy your share. Yeah, I'll buy 5 of your shares. If I buy 5 shares, I have to pay $100. But the way that the stock market works, and this is kind of the big point that I'm trying to emphasize here. So if you've ignored everything up until now, really, really pay attention. Whenever anyone buys a share, it raises the price of each share. Not by much, by little, but it still raises it. So maybe now after, I don't know how many would be bought, maybe after a few thousand shares have been bought, each share is now worth $21. So this is just for example's sake, to make sure we understand this is not real life at all. I'm not basing the math on anything aside from making up numbers. Maybe after, I don't know, after how many shares she sold? After maybe 2,000 shares are sold, each share is worth $22 instead of $20. But what does that mean? Okay, each share increased, and you just have to accept this as a fact. If people want to buy in that company, that means your company is worth more. If people are willing to invest in your company should be worth more because it means that people believe in you. So there's this whole system of belief in the stock market. If people believe in you, your company should be worth more. If people don't believe in you, your company should be worth less. And I'll talk about that flip side in a sec. So if each of your share now, Lorea, is worth $22, how much is your company worth? Let's do the math again. You still have 10,000 shares. If I multiply that by $22, instead of $20, that means your company is now worth $220,000. You've gone up $20,000, which means that's $20,000 now in your bank. Well, you only own 60% of the company, but still, your company is worth more. You have gotten richer because you own shares in that company, and hopefully that money is being used to make the company do better things, to make your unicorn frappuccino, to do all these things that you were talking about up here, to be able to invest in Mammoth and Bishop. By the way, every single time that you sell a share initially, that's just money in the bank. Like, so if you're thinking about this mathematically, and we're not going to write this down, you're selling, if you just sold 2,000 shares at $20 a piece, 2,000 shares times $20 a piece, you've just made $40,000. Your company now has that cash, that capital to invest in maybe your coffee shop in Mammoth Lakes. Maybe you'll take over Black Velvet. I don't know. Do something like that, right? And that's how it works. So every time that you invest in a company, that company's price will go up. But, okay, unfortunately, this is what happened. A story time. I'm still on the same example. I'm just going to come down here. So news article comes out. News in Mammoth Times comes out with a story. A customer found a rat tail in her coffee. Oh, okay. Again, stock market is all about belief. Do investors now believe that they should have this investment? Ew, I don't want to invest in a company that has rat tails in their coffee. So what do? Investors sell their shares. Whenever your shares are sold, I can't pronounce these words correctly. Whenever your shares are sold, prices per share go down. In the worst case scenario, you might have your shares worth $19 or $18, which is less than you started with, which is even worse. If you started with a company that was worth $200,000. If it's $19 per share, you're down to $190,000. You have lost money. And that's kind of where I want to leave this. I want to start looking at stuff and not take notes, just kind of understanding the basics here. When people invest, prices go up. When people sell, prices go down. They'll sell it to someone who thinks that, oh, like you want to sell your $22 share for $19? Sure, I'll buy it because I think after the $19, it's going to go back up and my share will be worth more over time. It's this whole idea. If you guys, the rest of the class, are thinking as investors, if you're investing in someone, if you think that, okay, even though there was a rat tail found in her coffee shop and you'll buy her share for less money, you'll buy it with the intent of saying, she's still a really good owner. Those prices over time, people will believe in her again, and I will get richer and richer. If I have maybe 19 times 10, if I have $190 worth of shares, maybe after a year, that will grow into $22 per share, which is an increase of $3 per share. You've now made $30 off of watching paint dry, off of waiting and believing. That's how investing works. Someone asked me a question. I have no idea how much you're picking up on this stuff because I haven't interacted with you guys. That's my bad. Ask a question so I know how you're doing, or give me a comment. Give me something.
In movies, there's always like well, sometimes there's a scene where like a bunch of people are yelling at each other in like a room with a bunch of screens and numbers.
Yeah,
What's that?
that's Wall Street. Let's look up. Do they have a Wikipedia article of Wall Street? It is a street in New York where they have the New York Stock Exchange. And in there, they have, I wonder if they have any buildings in here that show, what does the inside of a building on Wall Street look like? What do we got? We're going to get anything inside here? Yeah, they have like tickers. Oh, that next one is really good.
So what are people in there doing?
It depends on what type of person they are. If they're a broker, they are going to be picking up the phone because remember, 20% of the New York Stock Exchange / Euronet is still on paper. It's still people picking up the phone and saying, buy, 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 sell, sell, sell. So it's people frantically saying, oh, you want to sell? And then they punch in their computer and then it sells that stock to that certain person from one person to another. Or if it's just a person that's in there I actually don't know what the majority of the people in there are. I know that most of them are brokers. Maybe there's an actual person that's an investor in there. I guess I would need to research that. I'm not sure.
I think Chris Taylor has a brother who's a stockbroker.
Okay, so and you can be a stockbroker and just sit at home in your computer chair and just answer emails and do it that way. But I know for at least the New York Stock Exchange, which is not the NASDAQ, it is a lot more in person. You will be on Wall Street and making phone calls to people that are calling in saying, I'm going to buy this. Or maybe you're a broker and you're saying, hey, I'm going to call this client. Hey, there's a cool deal. This stock price just went down like $20. It's going to go back up. You need to buy it now, now, now. And they're like, okay, yeah. And then you punch it in your computer and then you call the next customer, try to get people to buy. And then you are influence the stock market by getting people to buy. Maybe you got one investor invest $100,000 into this company, another investor $20,000. You get all these investors to invest in this company, then it raises that company's stock price. You are directly influencing the stock of that one company. We need to watch Wolf on Wall Street in here, don't we? I'll cut out the bad parts because what they did was they were trying to sell an kind of inferior product, but that's a history lesson for another time. But yeah, they were brokers that were selling essentially penny stocks. What is in it for the broker? They take a slight cut of the fee. Like, I don't know what it is. It's maybe 10% or something. Maybe it's lower. Again, that's one of the specifics that they get into the Wolf on Wall Street, where the cut that they get to take away is much higher for penny stocks. That's a great question. Let me see what Gunner's saying over here. Oh no, it's Andreas being weird. Okay, so let's go ahead and look at what are the best websites for filtering. What was the one that I was using earlier? It's not on here. Stock research websites. Whatever. Let's go to the Motley Fool. See what happens. See if they have some graphs for us to look at. Stock market. Do they have any? Sure. Let's go growth stocks. What do they got? It's just articles, don't they? I need to. I try to remember the one that I did yesterday. That was really nice. Because back in the day, Google Finance was like the place, but then they shut it down. So when I was in high school, that's what I used. Best website for, what are they? I thought it was called filters for stock charts, I guess. Let's try that one. Tradingview is the one I did. Tradingview.com. That one was pretty cool. Yeah, so if you go to like a stock screener, I wonder if you can actually find anything that has really low. Do they have? Yeah, so these are penny stocks. So penny stocks just means the price per share is worth pennies. This one is worth 7 pennies to buy 1 share of whatever this company is. Let's look at their graph. I don't even know. Zomedica Corp. What's going on with him or her or this company? You can see that they have news underneath here on analysis of the graphs. We can see over time, this penny stock has fluctuated between, what is it, all the way up here, 35 cents, down here to less than 10 cents. Why are penny stocks so volatile? So they are, I mean, they're really scary. Think about this. If you have a stock that's worth 10 cents and you invest $10,000, or let's just say $1,000, $1,000 worth of a penny stock that's worth 10 cents and it goes up to 40 cents. You have now quadrupled your money. You have now gone from $1,000 to $4,000. Look at how fast that just happened. In this company, in March, right here, if you bought the stock over here in February of 2020, and then you waited until for a week, it went from 13 cents to 28 cents. It over doubled the price within a few days. Can you imagine doubling your money in a few days? That's a penny stock, but you can also lose half of your money in 2 days on the flip side. Look, what happens if you invest right here and then you sold down here because you were scared? You thought it was going to keep going down and down and down. Penny stocks are super volatile. I don't know, give me a company. Who wants to find a company? Walt Disney, I don't know, Tesla, Amazon? It's AMZN, I bet. Yep, Amazon. Let's look at the Amazon. You can see that which exchange is it on? It's on the NASDAQ. And let's look at their stock shares. So their stock prices for the last 5 years, this is their graph for the last 5 years. You can notice, wow, it suddenly took off over here. What date did it approximately take off? April 2020. When did COVID hit? Around April 2020. Well, really March, right? Back here in February, March. And then all of a sudden, so COVID has been very good to Amazon. Because people have to be able to buy stuff from home, right? So if you bought stuff on Amazon, if you bought shares of Amazon back here, 1 share is worth $2,082. Right now, it's $3,000. You would have made 50% of your money. If you invested $100, you would have made $50. If you would have had invested $1 million, you would now be $500,000 richer. Just by investing into Amazon all the way back here in March. Someone else give me a different company. Let's see how they're doing. Starbucks. SBUX. I'm guessing NASDAQ as well because they're newer. Yep, NASDAQ. How are they doing? Let's look at the last year to date. YTD stands for year to date. Within the last year, this is how they've been doing. Whoa, what happened over here? Yeah, they went down. So they had a stock price up here that was $88 per share. Then it went all the way down here to $71 per share. And now they're back up. Their current price is $88 per share. Yeah, so you'd have to look at the news. What happened with their news? And then the cool thing about Tradingview is they have a lot of analysis. You can see that the most recent news, what happened over here. Maybe there's an explanation over here for why they did bad or good. You can even see there's a meter right here that says most people are trying to buy versus sell. This will tell you if it's going to go up or go down, right? By the way, when you buy and sell stocks, you can buy them every like millisecond. You can buy a stock and sell it the next millisecond if you want, if you have a computer program assisting you. Typically, most of us average Joes are going to buy a company and then hold on to it for a few years and hopefully it'll go up. Let's look at an older one. Let's look at General Motors. GM. We can see they have a much longer history. I'm going to go to, for their data range, I'm going to go to all. Okay, it doesn't even have everything because I have to be able to scroll all the way back through this. Oh, why is it not going back past 2011? That's interesting. Yeah, General Motors doing pretty good, $28 per share, coming all the way up here to $36 per share. And again, if you have more shares, that means that you have lower price per share. Yeah, so they've been fluctuating quite a bit. They've been recently, let's see, let's come to the past 3 months. Past 3 months, they've been going up and up and up. Past 1 month, you can see this just in this one day. This is the fluctuation over just one day. It fluctuates all the way from $35 down here to $34. So it fluctuates by $1, $35.40 to $34.40. Just there, it fluctuates $1. $1 of $30, 1 divided by 30. They're fluctuating 3% just in one day. And again, what is your goal in the stock market is to make 3% a year. Again, that's the goal. On average, the stock market, you get about 7% a year. But if you do scalping, if you trade and sell stocks within the same day multiple times, it's called scalping. You can like quadruple your money if you're doing it really well, right? But that never really happens. I don't know, another company. Mammoth. It's not called Mammoth Mountain. They're part of, what is it called? Mammoth Mountain Company. What company are they part of? Let's do this. Who owns Mammoth Mountain? I should know this since I work for them. Altera.
Oh, yeah.
Let's look up Altera. Altera Limited, is that the right one? No, that's Australia. They might be private, or maybe we're just looking up wrong. So no, Tesla. I'll have to search Tesla. TSLA. How's Tesla doing? They have been doing really well. Look at this. So back here so this was when the pandemic hit around March. Wait, that's 2019. Where's March 2020? Pandemic hit right there. March 2020. Then all the way over here. So since the pandemic has hit, they've been doing really well. Let's hit all. Whoa. You can see that they exploded. It's crazy. All right, well, that was our intro to the stock market. So when we return, Friday's gonna be our fun day tomorrow. On Monday, I'm not gonna be here, but I'm gonna have a recorded lesson. I'm gonna talk about more stock market stuff and hopefully set up the stock market game with you guys.